Well, the market didn't end too well today. On Monday, March 20th, it looks as if the bears are back, and they struck right before witching hour, right before the end of the day. With the Fed coming up, they may continue to raise rates, so expect some weakness in the market. I personally shorted the XLF, which is the Spider Select ETF for the financial sector. I think there's going to be some more weakness. As you know, Credit Suisse was merged on over the weekend to prevent a collapse in that market, but everything else kind of remains weak in the financial sector, so be very, very careful. I'm almost 100% in cash. I'm going to be talking about this on the show at 5 o'clock. Hope to see you then.
Jim Malone coming to you here on Dallas Trading Floor. Sorry about that audio there. I had to get my headphones back in and running. The market kind of had a bear attack this morning, this afternoon. Just a lot of weakness in some of the financials. Of course, probably know this. Credit Suisse was bailed out by the central bank in Switzerland. So that's the other next domino to fall. Of course, Silicon Valley Bank went under on Thursday of last week, and we have kind of a very, very weak market. I've been shorting the financial sector using the ETF, the Spider, and it's working. I think we'll see where it's going. But one thing is sure, and that's for certain right now, the market is in correction. So we want to be favoring cash in this kind of market. That's just something we have to be very, very careful about. The market is in correction, and we need to be favoring cash. So again, I'm shorting the financial sector by shorting the ETF, the XLF. So kind of interesting way to do it, and we'll see how it turns out. Here's what we've got in terms of 5 stocks that I definitely are on my watch list. I don't own any of these, but I am looking at them because they may be in a situation where they're going to break out, but who knows? One of them, there's a very, very high price stock from South America called Mercado Libre, which is MELI, that's the symbol of it. And it's sort of like the Amazon for South America. I personally have actually seen this company when I was in Mexico City in November. I was in Mexico City, and the little Mercado Libre vans are all over the place. And this seems to be filling in a really important need in South America. They don't have quite as well a developed retail sector there as in the U.S. And Mercado Libre, just like Amazon here in the States, seems to be doing very, very well. So the interesting stock, it was down today, but I'm definitely watching it. I'm also watching Meta, which of course is old Facebook. They're going to be laying off a lot of people, but it's going up anyways. I don't know. I don't quite understand that because, when you're laying off that many people, typically that's a signal. But I'm watching it anyways. I'm not invested in it, though. I'm not invested in it. Another area that I think that you really have to look at is the chip sector. And currently there's a number of chips that are setting up well. One of them is Monolithic Power. Now, this is much more pure play. This is a relatively expensive stock. It's $494 a share, but it was up $6 today, or about 1.23%. Also, another one that I'm watching, though it was down today, is HubSpot, HUBS. So we want to take a look at that one. I don't know that one either. And then Lantheus Holdings. That kind of rounds out the top 5 of stocks that I've been kind of looking at, basically to see, what is going on here. Now, my current holdings, very, very skinny on the holdings. I did cut my position back in AEHR Test Systems. Of course, this is the company that is in the business of providing test equipment for the new silicon carbide chips. This is the big area of investment, even though we're in a down market. We're seeing a lot of investment in silicon carbide. One of the advantages, of course, of a silicon carbide as opposed to a regular silicon chip is it can handle very big temperature fluctuations, making it ideal essentially for the EV market. So this stock, AEHR, that's the test systems. Also, you might want to look at ST Micro. This is an Italian Swiss company that's in this, also in this silicon carbide space as well. I don't have that up here. I also took a position in Fortinet. It's up today. That's, of course, the security software company, and kind of an interesting one. Now, I am short, as I said, the XLF. That's the Energy Select Spider. That is that's basically up in price today. Interestingly enough, it just seems like that one is sort of bucking the trend. Okay, well, let's get into some of the charts here. I want to jump on over to I want to jump on over to the Spider, so we can take a look at that one, kind of see what's going on in terms of the Spider. Now, of course, the Spider is the ETF that covers the S&P 500, so it's very, very broad based. Interestingly enough, we had an update today, but it's off after hours. This tells me that there is definitely resistance at the 200-day line. The 200-day line currently for the Spider is right here at 392.20, 392.72, and so basically what I do think is that we did kind of get a little bit of a rally today, but I definitely think we're going to get. I definitely think the rally is going to be cut off tomorrow, and I think we're going to be moved down because it is starting to move down after hours. Here's the thing about the Spider: we're seeing the Spider move to the low end of the range. Typically, that is about 391. If it cannot hold 391, it probably is going to go lower. This is the kind of where we have it on there. So be very careful if you are if you are in the market, just because right now it's just it's just a time that tends to favor cash over. Basically, tends to favor cash over anything else. So be very careful in the market. Again, I'm almost all in cash, except I do have this short position in the XLF. Just wanted to also point out in this kind of tough to trade market, Gavin McMaster has an options course, and I took this last year. It was a fabulous course. By the way, I just wanted to put it out there for everyone. It's available on a special deal of $179. I took this last year and I paid $397 for it. But if you're a watcher of Dallas Trading Floor, it has a special. Believe me, this is very, very well worth it. I also sent out a special offer. But if you are interested in profiting in a downward trending market using options, this is a kind of course that you might want to take a look at. Very easy to get information on this one. If you're interested, just go to my link in the bio. If you're watching on TikTok, just go to the link on the bio, which will lead you directly to the special offer on the Gavin McMaster course. So it's really, really good, and definitely think that you should take a look at it. All right, let's get into some of the questions. Thanks so much for holding on, everybody. And let's take a question from TikTok. Wow, we can see we get a lot of people from TikTok today, which is great. All right, let's see. What about, would you take a look at NVIDIA? I think it's NV. I think NVTA. I think it's NVIDIA. That let's take a look at NVIDIA. NVDA is the symbol for that. That one is starting to make a move. Finally, we're starting to see a nice move on NVIDIA. The chips is one of the few areas in the market that seems to be getting a lot of interest, and so the chips are moving very, very nicely. And this is one of them I think that we could possibly start to open a position on. The relative strength on NVIDIA now is currently 98. That makes it in the top 2% of all the stocks out there. Let's take a look at the checklist to see if, we are, well, it's saying it's 0, but I can't believe that's true. Let's look at the technicals. We are we're a little bit extended. We're about 9.8% above the 21-day line. It is a little bit extended. I kind of like to see it come back down a little bit. Definitely, it looks like it's coming back down after hours. We probably want to put in a limit order for it, but definitely worth looking at. I want to take a look at the weekly chart. They did come through earnings, and for some reason, I'm not getting the earnings in there. For some reason my MarketSmith is not updating the earnings correctly, but definitely this one is. You should put it on your watch list. I have not bought this one yet, but I'm looking to enter this one if we can see some progress. Now their earnings per share were off a little bit in this last quarter, but I do think that we're going to start to see some strength once again in the sector. The sector has kind of been it's been difficult. Now here we're looking at the entire sector. This is the entire semiconductor sector. It's number 2, and it's continuing to get an investment. If you notice the relative strength of the semiconductor sector at 99, that makes it in the top 1% of all. This is basically a leading sector right now. Currently in that sector, we do have the normal. We do have sort of the usual suspects. One of my favorite, LSCC, is in here, and I think that's definitely worth taking a look at as well. And that is set up somewhat, and you can see there was my buy for Lattice. I've since sold it. I took profits on this one, and it is off a little bit in the after hours. So wait for this one to pull back. But I think that we might have a very good situation here as well if it pulls back to that 10-day line about 83. So this is one I want to put on the watch list. I'm not buying it right yet. Kind of waiting for the right conditions. All right, let's look at Tesla, everybody's favorite. Tesla has been in a trading range basically from about 109 or so on up to about 215. That's sort of been the way. Now today it came right up to the 21-day line and then kind of stopped. So 183. So I can't really necessarily say that this is reverse course higher. I'm not sure about that. But if we look at the 60-minute chart, let's see if there's a place that we can possibly go in here. Yeah, it sort of is in a trend, an upward trend. But again, nothing really defined. So I at this point on Tesla, I'd like to see it pull back closer to the 50-day moving average, or closer to or lower than that. So I'd like it to, before I'm going to buy this thing, I want to see it pull back at least to about 170 or 174. That's where I want to see it pull back on the for the line. So I think you've got to be careful with this. I wouldn't be a buyer here just because it just doesn't make a lot of sense. All right, nice rebound. Thanks, Charles. On ExxonMobil, yeah, I think people are looking. They're saying, man, that dividends looking really good in this kind of market with the banks failing and everything else. So that's one thing you can probably be assured about, is that ExxonMobil will pay the dividend. I mean, they will pay the dividend because they have the money in the bank. We're starting to see a little bit of a turn on the relative strength line. This is not a bad place to buy it because we're at the 200-day moving average. We just started to turn up. That's kind of what we got to do in this market. It's right basically at the 200-day line, and it's a very strong stock. So it's probably not going to go any higher than about 120. But and this is not the most exciting stock in the world, but I think this is a good place to buy it. Really, it was up nicely today, and if it can hold the 200-day line, I think it's a winner. And I thank you for bringing that up. I really thank you. All right, this is Impinj. This is another stock that I like. I don't own it. PI, it's the symbol on this one. And it is definitely, this is a pullback. It's pulled back basically to the um, 50-day line. So that's looking pretty good. This is a sector that we ought to be looking for stuff in. The 21-day line, I like this here. It's only 2.9% above. This is a good place to buy it. The checklist on this one is not working on my software, but I can tell you the checklist is either 89 or 100%. I very, very like this one. This one's looking very, very good. A lot of ownership is coming into this one. And as you can see, it's starting to move up very nicely in terms of the funds that own this one. This is a company also that's in the silicon carbide space. So this is an important space upcoming in the semiconductor area because it's important because silicon carbide is starting to gain on just regular silicon. So that's kind of the way to go. All right, short smart. All right, let's. What's going on with oil? Well, the price of oil, because of the war in Ukraine, is being manipulated. I think it's going to go up, though. I really believe that. I think that there are some forces at work that are selling oil to depress the price so that Russia can't sell its oil at a profit or something like that. Who knows? But I think it's the kind of thing where, well, we probably are going to see more in the way of oil. Let's take a look at the oil price, see how it closed today. And that's what I'm showing you here is the West Texas Intermediate price. Let's see if I can get that right. Yeah. No, I'm not getting it. For some reason, I'm not getting that as well. I'm having some issues with my machine right now, with my software right now, so I can't give you that, unfortunately. BVA, a couple of gaps to fill on the rebound, and a 5% dividend. All right, well, let's look at BBVA. I am not as bullish on any of the on any of the stocks, but this one's a fairly good stock. I mean, obviously, but again, we had this downturn. Here. I think it probably may fill some, but I don't think it's going to fill all the way up to the 50-day moving average. I think that you're going to see this thing go lower. That's my guess. I don't think we're going to fill the gap on this one. I think it's going to go lower. Just my gut feeling here. Let's take a look at the XLE. The XLF. This is the one I did short. I've shorted this twice actually. So, yeah, there we go. Okay. And it's up a little bit in the after hours trading, but I do think, like a lot of the other ones, there was my original short, which is on the 19th, and then we've come down and then we rallied a little bit. And I definitely think, and I did short here again today, so I think it may go lower. It may go lower. I definitely think we're going to see a cross there. I think this is going to be 50 days going to dive below the 200 days. So this is how I'm holding it. What I'm doing is I'm just rationing down my stop loss so that if I'm wrong, I can get out fairly quickly. So, all right, let's look at Netflix. Netflix has a lot of headwind because there's a lot of free streaming services coming online. I know that I got rid of my Netflix subscription, and now I'm just totally on free streaming because I'm able to get pretty much everything on that. So really, really good. Yeah, basically what's happened, of course, is that downward trend. We did have a little bit of a rally up to the 21-day line, but in general, it does have fairly high relative strength at 91. But this just does not appeal to me right now. I think we're going to see it move lower. I mean, we had a situation where we have been seeing very good cash flow, but I definitely think that we're going to have a leg down here. That's what it's looking like to me. even though we did have this rebound. So I definitely think we're in a downward trend, and it's just something that, it's not going to be that great. All right, Microsoft. Now, Microsoft has been doing quite well, and it sort of, we did kind of come up almost to a buy point here, but we're off on this one a little bit. This thing you got to watch out for here. The higher high is about 276 right here, and it came right up there, and then so it has resistance. We know that it has resistance. It came up basically to resistance once again at 272. My guess is that I think we're going to see this one. I mean, it rallied a little bit in the after hours trading, but there was a lot of buying, and then we're close to earnings. I don't know. I just think it's going to form a handle. That's very, very likely, and it may go higher. But I just probably would not be a buyer here. I think you got to wait for it to possibly pull lower. We're also about 5% above the 200-day moving, the 21-day moving average. But I think you need to go lower. The checklist, still not getting the checklist information there, but I wouldn't be a buyer here. I probably would not be a buyer of Microsoft here, just because I think it's just too. It looks like it's going to pull back, form a handle, and then maybe on a reversal there it'll go higher. But I think we got to be careful. TSM is also on the list. This is Taiwan Semiconductor Manufacturing. Unfortunately, we're in a downward trend on that one too. We're off a little bit in the after hours, not a lot. 84 relative strength. This was a nice move here when the 50-day line moved above the 200, but I'm just starting to see weakness once again in this stock. I mean, there is buying, but it is declining. So I'm seeing some weakness. I wouldn't be a buyer there either. I mean, I know that I'm being very negative, but overall, we're just seeing we're just seeing it move lower. All right. For Mr. Roman, let's go with STM. This is one of my favorite stocks, actually. This is the Swiss. This is the Swiss Italian manufacturer of semiconductors. And they make a lot of silicon carbide chips. So this is definitely coming into its own. Nice relative strength, 95 there. We came down. I think we had a. I'm gonna reactivate the reversal line. We're right at the reversal line, as you can see, and I definitely think we're going to get a movement higher. But we shall see. I'm out of this one. I was out of this one just because I didn't quite get it right. But right now, we're a good place. You can buy this very close to the 21-day line at 48.18. So if you want to get exposure to the semiconductor sector, I recommend that because right now, semiconductor manufacturing is surging. It's one of the only sectors. Oil isn't doing well, but the semiconductor manufacturing sector is doing well. So that's something that definitely I want to look at. Streamlabs, SLAB, Silicon Labs, yeah, SLAB. This is also, I think it's a foundry. Yeah, this is Fabless. This also nice bounce off of the 50-day line, 94 relative strength. So that's pretty good. That's good, strong relative strength there. This is in the Fabless area. This is a leading area. Now, one thing I want to show you here, Roman, really quickly, is that we need to take a look at who the competitors are. I think in this area, Lattice is the one. But let's compare Lattice Semi with Silicon Labs. This is Silicon Labs here. Let's go. Right. See, this is Lattice Semiconductor. And let's see if we can get both of those on the screen. So this is the comparison chart of two of the leading stocks in the semiconductor fabless area. One, of course, being Silicon Labs, which is doing quite well, and LSCC. LSCC is the better of the two stocks, I believe, and this chart definitely shows it, at least since the first of the year. So that's where, but you're definitely looking in the right area. You're definitely looking in the right area, Roman, because I think that they're both good, but I think that LSCC is just a little bit better. And let's take a look at the LSCC chart so that we can definitely take a look at that. So let's look at the daily chart for LSCC and see if we're in a place where we can buy it. I was out of this one. I did take profits in this one. What I'm doing kind of pretty much now is I'm swing trading. We had a nice reversal. So let's take a look at the LSCC chart. This is, if between the two of them, this is the one that I would probably recommend would be LSCC, at least for right now. It seems to be handling it a little bit better. We are just below the higher high of 92. We pulled down and we got support at the 21-day line, and we moved up. So that's very, very bullish. That's very, very bullish. One of the great things about LSCC, this is the leader right now in the area, in the technicals. This is the leader, but we're less than 4%. We're just a little over 4% above the 21-day line. So you could buy LSCC here, and I may be actually a buyer of this tomorrow if I can't find anything more to short, because I'm going to be, this is the really hard market to trade because I'm short and I'm long. That's not the way to go, but that's kind of what we have to do here in this market. It's just so weird that we have to do that. NVIDIA has their event tomorrow. All plays, AI plays are going to run. Yeah, I think you're probably right. But you know what? In this kind of market, I just wouldn't buy it until, the proof's in the pudding. I think we got to wait until tomorrow. I wouldn't buy it in the after hours. Just would not buy it in the after hours. CBRL. Let's look at that. CBRL. Cracker Barrel. This is the restaurant. Yeah, it definitely is going after the right demographic. It seems like they're the only ones. Older folk they do like the Cracker Barrel. 89 relative strength. Here's the thing about Cracker Barrel. I like this the way this is technically set up, but here's what I don't like about it. I just don't like this restaurants group. I know it's doing well. Retail restaurants, 20 out of 197. But I'm just not convinced that I'm just not convinced that restaurants are going to do well. I'm not convinced about it. All right, let's take a look at Palantir, PLTR. This is one of Peter Thiel's companies, PLTR. Yeah, okay, it's still trading below that 200-day line. Ouch. Yeah, I want to see it bounce higher, downward trend. We're below the 200-day line. I think this, this is definitely worth watching. And I've owned this a bunch of times, but right now I just don't want to buy anything right now that's in a downward trend like this is. So I just don't want to buy anything in a downward trend right now. So I would say no. I would say no on this one for Palantir. Okay, well, we've almost run out of time here. Let's see if we get everybody's questions. Can Netflix go lower? Yes, it can. Oh, let's look at the Qs. I definitely want to look at the Qs. Of course, for everyone out there, the QQQ is the exchange traded fund. It's the ETF that covers the top 100 stocks in the NASDAQ. So it's a critical thing. This is the reversal line on the QQQs. It has moved above the reversal line, but it's a little bit off after hours. I think that this is sort of a weak relief rally. I just wouldn't buy this one right now. Again, my tendency is to look at this and say, well, I think that some of the stocks are going to go lower. Let's take a look and compare. I want to compare two of the sectors of the market. One, of course, is the QQQ. And then I also want to declare the XLF, which is the Energy Select Spider. So let's kind of compare this. Yeah, there we go. Yeah, and so this is part of the reason I'm short the XLF is because, let's pull it up. Yeah, this is part of the reason I'm short the XLF because this is the QQQ, which is basically basically the Nasdaq, and here's the XLF. So as you can see, they're starting to diverge. The nice little rally on the QQQ, but I'm not ready to buy it yet. But the XLF is definitely in a downward trend. So that's kind of my look-see right now. All right. Well, thank you everybody for taking a look at the show. Oh, wait a minute. We have one more here. Is it time? Let's look at HubSpot. Let's look at HubSpot because I think that was the one that I had. I'd seen some good stuff on. I want to take a look to see how that's performing. It's Hubs, HUBS, and this is one of the few ones in the semiconductors, the software space that I do like. I don't own it though, but I've been watching it pretty carefully. So this is HubSpot. There we go. This is HubSpot here. Again, really not buyable, but one thing I do like about it, I'm starting to see that golden cross come in, where the 50 days moving above the 200 days. So there is some investment in this. So we're starting to see that. So that's good. There is though a lot of selling pressure. So again, I'm not an owner of it. I'm just watching it. We're almost on the 21-day line. But again, I probably would not buy HubSpot at this time just because it's not performing. It's in a downward trend. I mean, the market itself is in a downward trend. So one of the things you gotta be careful about is because the market is in a downward trend, we really want very little exposure. We want to have maybe. Currently my exposure is about 15%, mostly cash, and then of course I'm short. So not really until we get a signal. I don't think it's really a good time to basically be in the market all that much. I'm pretty much in cash. Now I do have a few little things. I'm putting out some feelers there, and I am short the XLF, but that's about it. So that's kind of the long and the short of it. So yeah, it's again one of those things that you just I don't know. I'd like to see some more news that was good. But I think that with what's going on, I think you're better to be very careful with your cash and just be really, really careful with your cash. All right, everybody. Thanks for taking a look at the show today. If you are interested in the Gavin McMaster course, and this is really, really good course, and you wait a minute, one more here. Oh, UPRO before the Fed decision. Oof, that is a tough one. Let's go to the UPRO. Let's take a look at the UPRO. And the interesting thing about the UPRO is it's a leveraged ETF. So you got to be careful, a little bit more careful with leveraged ETFs than you are with just regular ETFs. This has been in a downward trend. It's been in a downward trend, but again, just very, very strange. It's basically it's basically a bet with the S&P 500. So if you think the S&P 500 is going to go up, which I don't believe it is, you would buy this. I wouldn't buy this because I think with the new Fed, with the Fed coming out, I think you're going to go. I think it's going to continue on its downward trend, and I wish I wasn't the case, but I definitely think that we're higher interest rates, which I don't think they're going to cut it. I don't think they're going to cut interest rates. I think it's going to go higher, and I think it could go as high as 5.5%. Now, hopefully, I'm totally wrong. I hope I'm totally wrong, but I think the interest rates are going higher, even with the problems. Even with the problems that you have with the overall banking sector. So I just don't see any relief, unfortunately. All right, let's take a look at Ford. As Ford a buy? No, I wouldn't buy Ford here. The problem with Ford is that, it's just been trading under that 200-day moving average, and just not something that you want to go with. I mean, there's a lot of selling here that I'm seeing in Ford. I mean, I wish I had better things to say about Ford right now. I like the company. I like the fact that they're on EVs, but I just think they have a ton of way to go. So I would say at this point, no to Ford. I just think don't even buy it on the depth. Just no. uh, you know, it's just really a no buy. It's a no buy. So basically, no buy Ford. So I think you just got to be super careful. So I just don't think you can buy Ford. Its chart doesn't look good, and you have GM, which is already idled production. I think that we're in for a whole lot of pain when it comes to when it comes to the automobile industry. I just think we're in for a whole lot of pain. So I would say no to Ford. All right, last one. Here's the TLT, and this is the bond fund. This is so let's put that up there. Take a look. TLT. And again, this is the 20-year bond index. Now, here's the problem. As the interest rates go up, the value of the bonds go down. That's kind of what that was the liquidity trap that Silicon Valley Bank, got into. So I think that, I might spike up here a little bit, but it would be a relief, or it would be a dead cat bounce at the very most. So I think stay out of it. I would just stay out of it. Again, not very exciting. Here I am telling you to just stay in cash, but I think until we get some really good, better signals in the market, I think that's really kind of what you really got to do. You really got to just stay in cash and don't buy Ford. And it's not fun, but that's kind of the way. That's kind of the way it's sort of shaping up. So. I wish I had better news, but I don't. So I'm going to try to be as honest as possible. Don't buy things that you don't need, and I don't think you need a loss. So be very, very careful on your exposure right now. And it's good to be in cash. There's nothing wrong with cash. And anyways, but one thing I would like to say is please smash that like button. I really appreciate it. That helps us get out there to a lot more people. Also hit this big like button too. We'll be back tomorrow, of course, with an episode of Dell's Trading on the Floor. So until then, everybody, happy trading, and stay safe. And really, it's a good time to be in cash. Build those watch lists, and then we're going to have some more information on shorting and some option strategies. I do highly recommend the Gathering Master course, and of course that is available for a really good deal of $179. Normally it's $397. So I will be back here tomorrow. Thanks, everybody. Happy trading.